Hello friends, hope you had a great New Year 2024, and this New Year I wish everybody a happy New Year, and this year is going to be a phenomenal year for us. Okay, so this video today we are going to discuss two things. One is about bond, what is bond and how can we interpret or read from bond market. The second is I have started a portfolio for this specific year. Okay, I just bought some stock for a worth of 1 lakh, and I'm going to share what I have bought, and that I'm going to accumulate slowly for this entire year, and we will be refreshing and looking at the stocks every month to check how our portfolio is performing. Apart from that, few stocks which I have already discussed, and I will tell you like what are stocks I'm going to buy. So let's stay tuned, and this is Sundar and you are watching Mindful Finance. Today, as I mentioned, we are going to check about bond. What is bond? So understand is very simple. Okay, this is a very simple concept, but people feel it's very complicated and finding difficulty in understanding what this is one. So bond is basically a government gives, or government is getting a loan from the public. So for that, like for example, if you are giving a home for a lease, what you will do, you will get a bond from them, right? Some like 3 years bond. For 3 years, this much of money you are receiving from the tenant, and after 3 years you need to return the money back and get the home back, right? This is why you are having a bond. Similarly, government gives this bond to the public, and the bond will have a certain value. For example, a bond might be having a face value of 10 and the worth of 100 rupees, and they'll say the yield is 10%, and you have to buy for 1000 rupees. So 100 bonds, face value of 10 is 1000 rupees, right? So this is how the deal is made. So every year you will be getting 10% from that money, from your investment. So this people choose this bond mainly, they have a trust with the government. If we are not trusting the government, to whom we will trust, right? We trust our government. Government will pay the money back. So, and that is why it is called as a risk-free investment. The 10% yield, right? This is called as coupon rate. We won't call this as a rate of interest like similar to fixed deposit. We call this as a coupon rate, and this is called yield. Okay, the yield has a different thing, right? Yield is has a maturity value. Maturity value in the sense how long you are going to invest. For example, there are bonds which is for 3 months, which are for 6 months, which are for long term, which is 10 years. So now government makes a deal that yield percentage, right? For short term, normally it will be less. For the long term, it will be high. The reason is when we are going for a long term, you are taking more risk, which is doing the long term, the market might be volatile, right? Things will be volatile. So you are taking a risk to stay for a long term. So you are getting a more yield from that. If you stay for a short term, that means short term yield is something that short term will be always less because you are not taking much risk. It's normally risk and reward is directly proportional. More risk, more reward. But there are some scenarios where it happens other way around, which is the short-term interest, short-term yield will be more, long-term yield will be less. For example, the simple calculation is long-term yield minus short-term yield. Okay, if you get a negative value, that means it is the condition is called negative yield or yield curve inversion. Because normally, if you see, the short-term yield will be less, like 4%, then 6% or 8%, then 10%, 11%. So when the 10-year goes, it's a curve. Okay, it's a linear normal curve, like uptrend curve. But in the other ways, if the interest rate is, the yield is coming lesser for the shorter duration, right? For the shorter duration, your yield will be say 7, and 3 months will be say 6, 1 year will be 5, 10 year will be 3, right? Your yield is going down. That means it's called inversion. What does that mean is people are not ready to take risk. Long term, nobody is ready to take risk. So your coupon rate will come down. But in the short term, people are okay to take the risk, because the short term they are getting more yield. The market is not friendly for them. It's not trustable. People don't have a trust in the system, so they don't want to stay for a long term. So that is why the shorter one yield goes high. This is the high level concept of bond behavior. What to infer, like what is the point you need to understand from this one? If you see this, so this is, see, normally the curve is supposed to be upward, right? So whenever the inversion happens, and I think you're able to see this chart clearly. This is from 1980 to 2023. If you see, whenever the negative thing happen, you can see a patch over there. If you're not, I think it's not visible in the, let me show you in this one, because I think that is not clear for you. So if you see this one, whenever the negative, you can see the right side, right? The positive value, the negative value. So whenever it goes downward, you can anticipate there's a patch, right? That patch is the recession. So whenever the inversion happens, there is a recession. You can see each and every time whenever the negative downward happen, then there is a recession. But see, this is going upward, and the recession happened very long, after a long time. I'll explain what it is. But see, here also downward happened a long time, but here only the recession happened. So similarly, downward happened, and during 2020 around, we had a very small little bit of recession. And now again it's a downward. So now let's see what is happening in the market. Okay, I'll show you one more detail on this one. See, look at this screen. This is a comparison. Okay, if you see bond for US and India, the comparison. If you see clearly, 1 month, 2 month bonds are having higher yield, and 10 year is 4. So 4 minus 5.3 is minus 1.3. So it's a negative inversion. Look at India's 3 month is 6.9, 10 year is 7.2. It is minus, it is plus some 0.3, right? Something like 0.3. So it is still, it's a positive. So from India wise, we don't see any inversion. But US, it is very clear, there's an inversion. So now India is doing, so can we say India is doing better? We don't know. So we cannot just go with the yield curve alone. Let's drill down the other thing. I'll show you another one. See, this is the comparison. There are 3 things. One is the treasury yield, then consumer sentiment. The third one is consumer price index. There are 3 parameters. Okay, we cannot just look at one parameter and decide something. If you see the treasury yield, whenever the negative inversion happens, okay, you can see consumer sentiment also goes down, right? Whenever the consumer sentiment goes down, we can find a recession. Okay, 2 things are happening here. So see here, yield is going up, but here the sentiment is going down, right? So normally there's a transition happens. Okay, during the that is a peak time happens. It is normally a lagging indicator. Okay, only after a year or something you will get this data, because after a year only you will come to know how many people purchased or anything, right? So you cannot, it's not a leading indicator. You cannot say this year consumer sentiment is going to be positive or negative. Only after it happened you can predict. You can talk about that. So every time if you see the yield, whenever yield happens, whenever it's trying to recover from that, you will find a recession, right? See the price index now. Price index is going high. That means the price of the products are going high. It actually reached a very high point and recession happening. This was in 1980. Let's see whenever we face the scenario, 2008. See you can see the yield was going down in the negative side and it started to pick up. But here the sentiment went down at this area, even though your yield is positive. Okay, your sentiment is going down. Consumer price index is going up here, right? So that is how the recession happens. Even during the COVID time, if you see, there's a yield curve. See, look at the sentiment completely like down. Like people are not buying anything. So there is there's no price index or anything, right? There is nothing happening in the market. So that is where the small recession happened. Now, in the current scenario, we are seeing a negative yield. Okay, but sentiment is not bad. Sentiment wise, it went down, it is going up. Price index is also going down. Right now, we cannot say any recession going to happen or not, because all are not exactly matching, right? We cannot decide anything right now. at least two indicator. See, if you see these two indicators are positive, right? That means I don't see any recession over there. Unless and until you see a negativity in any two, then we can say there is going to be recession. So for now, what I feel is I don't see any recession in coming years. That might be a different opinion on this one, but I feel I don't find anything related to recession in the near at this point of time. Okay. So now coming back to this New Year thing, what I did was I started with my 1 lakh investment. I'll tell you what I invested in using my 1 lakh. If you see the sheet here, so I dumped more into gold. You see gold bees, right? Almost like half of my investment went to gold bees, and mostly I'm trying to invest in the ETFs. You see Nifty IT, Nifty Pharma, and Junior Bees, because the reason is I'm already holding investment in stocks with respect to small cap, mid cap, and pharma, IT, everything. I'm not going to add any more in the stocks unless and until find a correction in the stocks. Okay. Till then, I'm planning to invest only on the indexes. Okay. So I'm going to have a SIP based kind of a thing. And IT is already down. So I'm having a stock like Infosys, Tech Mahindra, all those things. I'm going to hold those things for now, but I'm going to add index investment. Okay. So, and again, one more thing. This is not an investment advice. I'm not asking you to buy this stock, or I'm not advising you to buy this stock. I'm just telling what I'm doing it. And if you want to invest or anything, you do a proper research or have a SEBI registered advisor and get the details from them. Okay. So if you see, this is a Bharat bond. Okay. I'm already holding a Bharat bond, and normally why I buy Bharat bond is I buy and I pledge that one and I use for trading. So it is an investment as well as I use this money as a hedge, or I use for trading. I buy P, I buy a PE, or I sell call, right? So that it will act as a hedge for my investment. Okay. So that is another thing is liquid bees. Even the liquid bees also. Yeah, so liquid bees are mainly why I have liquid bees is whenever I do a profit booking, I put that money into liquid bees. Whenever market corrects or something, I use this liquid bees for investment. And also the next thing is the liquid bees is my emergency fund. If your expense per month is say 20,000, at least you need to have an emergency fund for 6 months, which is 1,20,000. So that is how the liquid fund works. So I keep on accumulating my emergency fund so that I use for dual purpose, only one for emergency and one for investment purpose. Whenever the market goes down, if any stocks correct, very fundamentally strong stocks corrects, I go and buy them. Right? That is the reason why I have liquid bees. The major stocks which I already discussed with you are Natco Pharma, Manappuram Finance. The reason for Manappuram Finance is I'll come to that point why I am doing that. The reason is what I predict or what I feel is I'll just show you the. So this is the gold technical chart. Okay, if you look at the gold chart, right, in the long term you'll see it's a inverted head and shoulder, or you can have a say triple top, like how many times, 1 2 3, this is the 4th time it is hitting it. I can see lot of multiple patterns over here. One is a cup and handle. You can make whatever way you want to think as a cup and handle. So this is how it is a cup and handle for me. Okay, so this is a cup and handle, and this is inverted head and shoulder. So if I see that technically, it may go to for 18% from the current stage. So that is why I am betting more on gold, and that is another reason why I am buying more gold. Okay. So now if we look at the Manappuram Finance is their business is based on gold. They give loan for gold. So when gold price increases, Manappuram Finance also will increase. So that is the analogy. Okay, that is the reason behind why I am buying Manappuram Finance. Apart from that, if you see, I am power grid infrastructure. We discussed a lot about PG InvIT, right? Whenever it goes down, I try to accumulate. So already I have an investment, and I keep adding whenever it goes down. And another thing is a South Indian bank, which I have already invested. But again, for this year, I'm showing how much I have invested, so that from this stage onwards, we can track these stocks where it goes. And one more is a Mahindra and Mahindra. So I have a very strong opinion about Mahindra and Mahindra. It can grow better from here. But they have some debt, but I hope that will be resolved. And they have a very strong future plan. I'm feeling strong about Mahindra and Mahindra. So apart from that, we already discussed about couple of stocks which are Latent View, Cipla, Dr. Reddy's, Divi's Lab. So these are the stocks also I'll start to accumulate. From next month, I'll add whatever I'm investing. I'll invest and I'll let you know what I'm doing it, and we can track this portfolio, how it is going to perform on this year. So that is the whole concept behind this one. Hope you understood what is bond and what is the investment strategy I have, what are stocks I'm going to invest. So we have discussed all those things. Hope you like this video. If you like it, press the like button and press subscribe button and share it with your friends, and don't forget to press the notification icon. And one more thing I want to say is I have launched a book. Last time also mentioned I have launched a book. I'll share a link about this link to where to buy this book. This is also available in the Kindle format. You can buy it from Amazon. Thank you.